Welcome to the Growth, Grace, and Prosperity Podcast. Join Stewart Heath for down-to-earth conversations with top professionals, entrepreneurs, and leaders who have a story to tell. Let's get rolling.
Hello, everyone. Thank you for joining another episode of the Growth, Grace, and Prosperity Podcast. I'm Stewart Heath, the CEO and founder of Harvard Grace Capital. We're very blessed to have our guest, David Weild, if I'm pronouncing that correctly.
That's actually Weild.
Weild, forgive me. I should have asked that before I pressed record, but
that's how I got the nickname growing up, Wild Weild.
I love it.
Correcting the teachers in the classroom. Yeah.
Well, you can tell us all about that. Thank you so much for being here. Everybody, buckle your seatbelts. This is a very impressive gentleman. We're going to hear his story. So, David, thanks for being here.
My pleasure, Stewart. Yeah.
When you think back on your career, are there any episodes or moments that put you on the path to where you are now from where you thought you might be heading at that time? Game changer moments?
Oh, I mean, I had a father who was a Yale educated undergraduate, Yale Law School intellectual property lawyer, and we used to get into raucous debates about whether or not life sciences would be patentable because it was a lot of times naturally occurring, and so that was at the dinner table as a kid. And then when I was in university or just afterwards, Genentech went public in 1980. The stock went from 30 to 80. I saw how capital could actually finance engineers, scientists, and entrepreneurs to solve problems for the world in the innovation economy, and that bug bit me, and I went from I guess for a couple of years I worked in television and worked doing television post-production. I left, doing the traditional thing, maybe go to med school, trying to figure out what I wanted to do. And I ended up going to Wall Street, and I've been working with financing, companies and changing market structure and stock exchanges and all sorts of things ever since.
Oh, that's great. Great. It is amazing to see what properly managed capital can do to really improve profits, but also the human condition, if with the proper management. That's the big question. David, sometimes we hit bumps in the road, and sometimes it changes our direction. Other times it's just something we got to survive or manage our way through. Is there a time that you hit a bump in the road that you can share with us how you handled it?
Well, I think my career, for the most part, most of the time, it was pretty smooth sailing. I mean, Wall Street I was running equity capital markets, which prices all the IPOs at a top 10 firm. And I actually priced this a real number, 500 initial public offerings. I worked on the NVIDIA IPO as a joint manager with Morgan Stanley for Jensen Huang, and, put Larry Fink and BlackRock into business. And so, but I was always a hard worker, and so even though there would be major reductions in force, I always survived it until I became kind of so senior, and they I was reporting to the CEO, and they would bring in a new CEO over my head, and he wanted his own boy working for him, which you become a casualty of that, and that kind of caused me. The last time it happened, I was Vice Chairman of Nasdaq and executive vice president running the listings businesses globally. And then, I sort of was at a crossroads about what am I going to do? And I was really interested in fixing our markets. I thought that they were just so critical to the outlook for our kids and our grandkids, and there was nobody sort of working on it. And so I decided that after talking to Morgan Stanley and Goldman Sachs and places that I wasn't going to have a bully pulpit unless I created it myself. I had to be an entrepreneur because I would have to kind of, espouse, if anything, the agenda, which was for, Goldman's or Morgan Stanley's. And a lot of times, they're just bigger issues when you've got a company that's that big, and they've been allies, and if you will, historically, and a lot of people that I collaborate with, but what happens is, you have a different interest for your shareholders when you're really large. They have franchise committees. They're not willing to take a lot of risk because somebody figured out at Morgan Stanley that if their stock price goes down a penny because of some scandal, it's worth 30 million in market value. I may get the numbers wrong, but a big number. So they're very risk averse. And then when you deal with government relations, they're focused on the kinds of things that matter most to their shareholders, which could be in wealth advisory, and the fiduciary rule that came out and how that affects them. It could be in holding on to the carried interest because they have a big asset management business and they don't want it to be taxed at an ordinary income rate. And so when you care about how the stock markets work for entrepreneurs, which are smaller companies and smaller than their typical size, initial public offering, well, that's something that's important to them because it feeds, but they need somebody like me ultimately to carry the water down in Washington because they can't afford to spend their government relations capital, if you will, on something that really will not near term materially improve the outlook for their shareholders.
Did you find that you were, and you may have just said that, did you find you were the only one sort of in the Wall Street finance world that was worried about these future issues that you were wanting to work on?
Yeah, I mean, I actually was a bit of a rarity, and in fact, people poked a lot of fun at me. I got a call from the CEO of one of the largest Wall Street firms after the Jobs Act got passed in Washington, and he said, "Congratulations for going from whack job to conventional wisdom in the short space of 3 years." Because what I was telling people is we changed our market structure. We dropped the bottom out of support for smaller capitalization stocks, IPOs. The IPO market, as we knew it, was not coming back. The gestation periods for companies to go public was going to be a lot longer, and so I think that a lot of people in the big traditional Wall Street houses, that did my old job for a living, had a vested interest in telling clients the window's open, come to your IPO, because that's how they make their money, not by people saying, well, maybe this market structure isn't going to do for me what I thought it would do, and so. He called me up and he said, "Congratulations for going from whack job to conventional wisdom in the short space of 3 years when the Jobs Act was signed into law." And he confided in me that he actually, that's why I'm not mentioning his name. He said, I actually agreed with you. I read your papers, but I was unwilling to say something because I knew they were going to make you out to be crazy. And given that I'm running one of the largest Wall Street institutions, I can't afford to be painted as crazy. Because really, literally, we were saying, the market doesn't work anymore. The market is not structured the way it used to be structured, and consequently, we're going to have 1/10 of the number of IPOs that we should have, which has been the message. And frankly, it's still not fixed, and it's one of the things we're setting up a Weild Foundation, it hasn't been formally launched, but you should see it pretty quickly. It's the website's up, I think, wieldfoundation.org. I think it may be live. We're going to tweak it and mess with it, but it's a tax-deductible charity, public charity by the IRS. We're going to raise a war chest so that we can write the kinds of easily relatable, stunning economic papers, kind of shockonomics, if you will. And to motivate people and to educate people about how this country and our people and our economy can be so much better than it currently is. And so, as I said, before I go to my maker, I want to make sure that I institutionalize the processes that we use that led to the only major pro-capital access legislation since the Investment Company Act of 1940. That's 85 years. So I'm the only guy alive that's done that. And it's because it's an insanely complicated process that we kind of cracked the code on. And I think that we just need to be able to teach people how to do that so that we can move the country forward, because there's a lot of stuff a lot of education that needs to be undertaken with people on the Hill. The average congressman in this country, it's a pay increase for them when they're in their first term of Congress. They are not strong on economics. They are not strong on markets. And so they need a lot of handholding and then and education with somebody that they can trust, who's a patriot, who is putting the country's best interest forward and not playing the game of politics. So I've been studiously, intentionally, and independent. I love working with the Republicans. I love working with the Democrats. I love figuring out where the common ground is and presenting it to people so that they can go out and legislate and move the country forward. And so one of the most amazing things happened to me when my oldest was 16 years old. He's now 23. And I took him to listen to me speak in front of the House Financial Services Committee, their subcommittee on capital markets. And at the beginning, I said, the reason why I'm here, I put my red, white, and blue epaulets on when I come in and I testify as a subject matter expert. And I am always going to tell you what I think is in the best interest of the country, because what we're working on is not for you and me, it's for our kids and our grandkids so that they have a better opportunity to be successful than we had. We owe that to our kids and our grandkids. And so put the politics aside, but these are ideas that I think that hopefully on a bipartisan fashion, we can get behind and we can create that infrastructure required, excuse me, to support better opportunity, better economic growth. And something funny happened when we got to the Q&A session. All the congressmen started the Q&A with me listing the names of their kids. That's why I'm here. So it gave me chills. It told me that these people really care. And so it's our job effectively to try and help them find a path to move it forward so that their kids, my kids, your kids, all are going to be better off, 6, 10, 50 years down the road.
Yeah. So the Jobs Act was passed in 2012, I think, during the Obama administration. Is that correct?
That's correct. I was at the White House in the Rose Garden for the signing.
That's great. And I'm in the real estate syndication business. We do small deals, and that had some impact on Reg D's as well. And then under the Trump administration, it seemed to continue to get a little bit clearer and a little bit more liberalized, if you would. What's been your difference in working with Republican and Democratic administrations on issues of public markets and things like that?
Well, I think they're really supportive, both sides. I think the problem, though, is that they got a limited amount of bandwidth, and it's what you prioritize. And so, I found it harder to get the Democrats a lot of times will prioritize affordable housing in that committee, which is understandable. But I think that there's much more imaginative stuff that we can do. I mean, I'd love to get incubators and accelerators into inner cities with a tax incentive to basically change the culture and get kids to want to be entrepreneurs and business people. Because if you think about it, and I'm a guy who's walked through projects in this country, and when you look around, and I was with Saquon Barkley, the noted running back now for the Philadelphia Eagles, and he's an amazingly nice guy. And he was giving out book bags, and I was there for getting back to school in the fall, and I think it was in August one year, and it was the project that his parents, I think, had met in. And if you looked around it, what you would have observed is that there's a playground for little kids, but there's really no place for preteens and teens to go. And then, you got a big single mother problem in this country. So the kids are under-resourced, they're under-engaged with adults, they don't have anything to do. And so what do you think is going to happen? I mean, we've created a system in this country that actually is going to ensure that more of these kids end up incarcerated for one reason or the other, where we have more teenage pregnancies than we need to have, and particularly with the repeal of Roe v. Wade. And so what we're doing is we're creating our own chronic poverty. The Anglican Bishop Desmond Tutu, said, we have to stop pulling people out of the river and figure out why they are falling in. And I would tell you that these projects many times cause these kids to fall into the river. We have to go beyond that. We have to go to the point of figuring out how to keep them from falling in. And it's important actually to all of our collective interests, because we want all of America working, engaged in the system, so that we can drive up productivity, we can drive up tax receipts, we can take control of the deficit, so that we don't end up with a massive amount of de-dollarization and inflation, which could undermine all of our lives if we're not careful. I mean, it's one of the big shocks right now. Look at the size of the deficit. It's $36 trillion, and they're running around talking about tax cuts. And every time a Republican administration has championed tax cuts and said it would pay for itself, it hasn't paid for itself. Okay, and then you also then have the challenge with tariffs out there, and if we start, I'm all about U.S. first and making America great, really am. I mean, that's what I'm about. But but tariffs increase costs, which increase inflation and drive inflationary pressures. And it's interesting when you look at fixed income. The Fed knocked down the interest rates. But you're looking at mortgages, which really have rates that haven't really come down. They're up at 7%. Okay. So the market is telling you that we still have some underlying inflationary pressure to worry about.
Yeah.
And
the 10-year Treasury is telling us that every day. So.
Every day. Yeah. I mean, you're watching it probably, closer than I am, and that's what it's telling us. So I think we got to be very careful. I mean, I think we had a good inflation number, relatively good, but it's still higher than we want it to be earlier this week. And it was better than I think people expected, because, the labor numbers were amazing. I mean, look at it. They were kind of calling, I get the numbers wrong, but they were looking for about 150,000 jobs, and they got 250,000 jobs. Yeah.
Yeah. Very strong labor market. Yeah. Yeah. Which probably means the Fed's not going to be cutting anymore. And that's okay. I mean, in my world, I'm doing commercial real estate, and a mortgage at 6.5%. It's pretty darn good for my whole career. I mean, it's always been a very nice middle rate. I don't think we're going back to the.
I remember when we had the oil bubble and and some of those inflationary pressures way back when, and we had short-term interest rates. The inverted yield curve went up to like 18% or something crazy. So it's you and me both. I mean, when you've seen it a lot worse, instead of us blowing out the pilot light and sticking our head in the oven, we're sitting there and thinking to ourselves, well, guys, it could be a whole heck of a lot worse. Just be thankful it's not, right?
Yeah, exactly. I'm not sure if this is, in your wheelhouse or not, but do you think that AI is going to exacerbate some of the problems you were just articulating for the under-resourced community? Is it going to make it worse, or is it going to create more opportunities?
Well, I think it's going to make it worse for the whole country. I think that the real challenge is it's going to throw a lot of people out of work. And I actually keynoted or spoke I was on a panel on the ethics of AI. It was the Intelligent Automation AI conference out in Dallas. And, one of the reasons why I agreed to go speak was because I wanted to see how corporations were deploying AI. And look, they're looking at these bots and things to replace headcount, to take headcount out. It's going to cost me $5,000 per seat to do that. To do this work automation, whether it's response service desk stuff, and I can take out a $75,000 or $100,000 a year employee. I mean, so make no mistake. I mean, that this is an efficiency tool, and it's going to drive a lot of people out of work, and a lot of those people are going to need to be repotted, retrained, and that's one of the reasons why I want to get the IPO markets working again and supported the smaller capitalization companies, because if you look at it historically, when people get thrown out of work, they start businesses, right? And they need equity capital to start businesses. It's one of the challenges I had when you go back to the flash crash, or that the financial crisis of 2008. And I was shortly thereafter at Treasury, and they were having a conference on getting our capital markets going again. And the first thing they were all talking about was, lending in inner cities and communities, because a lot of the localized lending had been obliterated because the big banks and things were just looking at the bigger ticket size, the bigger loan sizes. They were in triage mode. And so a lot of the land-based community infrastructure for small business lending was was obliterated. So how do we replace it? And I was like, guys, I said, you don't have little companies, they run out of money. You need equity capital, you need assets, you need cash flow. So you need something to get the startup things going again, the startup community. And so we jammed equity onto the agenda and started having a little bit of that conversation. People don't know this, but the Jobs Act gave birth to crowdfunding. Okay.
Yeah.
So it gave birth to generally solicited private placements. So if you think about the kind of the unintended consequences of well-intended legislators, one of the incredibly stupid things that they did years ago was they said, you can't solicit capital from people that are not accredited investors, and you can't solicit capital from people that you don't have a pre-existing relationship with. So if you live in a poor community, basically means you can't solicit capital because you don't know anybody that has money that meets the accredited investor standard. So it was this unintended way of actually institutionalizing poverty. Okay. It's mad. And so it takes years for the people to kind of learn how to use these changes in the rules. But the idea is that all of a sudden you have a toolkit where legally you can breathe hope, change culture, get people to engage, because my experience is, and I've spoken after we got the Jobs Act done. I spoke at the National Black Chamber of Commerce. I spoke at the Obama White House for the I Have a Dream Summit. And let me tell you that these kids are, it's tough enough being a white guy coming from a well-to-do community, raising capital, getting a business started. It's impossible if you're, Black and poor in a poor Black community. And we have to change that. It's because it hurts every single one of us. We want those guys, working. We want them contributing. We want them making money. We want them, grabbing a slice of the American dream. We want upward mobility. We want them to help be the solution, not us causing the problem by systematizing and institutionalizing poverty, which is what I think we've done.
I agree. Having worked in racial reconciliation ministries in the past through education, it's until you see it up front and work in it, you don't really understand the problem. And most of us don't, because we're not in it every day. But I think you're articulating it spot on. It will help. It will help everybody.
Well, look, it's like one of the things that we should do with our leaders and everything is they should all walk through poor areas and understand and imagine what it's like to be in that community. What does a kid do? Yeah. What does a kid have to do? What is he likely to, because when I don't know if you have kids, Stewart. I have
only 8.
Only 8. Okay. Well, the boys take a lot of risks. They need they need the strong hand of a man in the house to kind of slap them upside the head, figuratively speaking,
Sure.
And I didn't hit my kids, but they're reel them in, because they can be really, they can get into a lot of trouble if they aren't guided, if you will. And the girls too.
An experienced hand to guide them. Yeah.
Right. And so, this is the statistic in this country, right? 25% of white kids are born into single parent households, mostly female dominated, 35% of Latinos, and upwards of 70% of Black kids. It's Armageddon. And the econometric models will tell you that they are 50% as likely take race out of the equation. If you're born into a single parent household in this country, you are 50% as likely to be successful as a kid who's born into a 2-parent household. So we just gave the lie to all men are created equal, because we have a universe of 50%ers in this country that we've made. Okay. And the reason we are still structured as if we are in the Leave It to Beaver era, for people that may or may not remember that, where you had Ward and June Cleaver, and June was the wife, and Ward went out and brought the bacon home, and June held down the fort with their 2 kids with the white picket fence, and she had a white white apron on. Well, that's just not how the United States is structured today. Ever since the sexual revolution and the pill in the 1960s, that genie came out of the bottle. So but we're still structured as if we are dominated by two-parent households. And so we're just killing our long-term competitiveness by not addressing that.
One thing we like to ask of our guests, and with no numbers or anything, but because of the growth, grace, and prosperity, we like to hear about how you deploy your personal investable cash. What asset classes do you like? What do you not like? Not asking for single stocks, but really asset classes. What do you do with your money?
Well, I look, I think there is what I do and what you should do. Okay. And I'm going to tell you that what I do is not what people should do, because I'm kind of all in on my business and trying to drive and create change. Okay. And so I wouldn't recommend that for most people. And, I'm a 7-day of work kind of guy, kicking it. And I want to really contribute and make sure that we make the country as good as the country can possibly be. And I'm afraid that there is a real lack of of really constructive ideas, creative problem-solving ideas. Lots of problems that I call them, you need systemic solutions for systemic problems. Okay? It's not something that you can do locally most of the time. And there are many, and we could list them off, intractable problems, very difficult to solve. And the reason they are not solved yet, the deficit, the healthcare, we spend twice GDP, what most developed countries do, yet our healthcare outcomes measured by life expectancy are worse. Okay? And there's a reason why these are intractable. They're difficult to solve. And so we want to start figuring climate change is a real thing. The ambient temperature of the world's going up. Look what the apocalypse we have going on in Southern California right now, in the Los Angeles area. And so we're going to have to, become much more preventative, right? We're going to have more weather events. We're living in Tornado Alley here. We've got hurricanes. I mean, gosh, look what had happened in Ashton, North Carolina, which everybody thought was immune from climate change. And then a hurricane hung out over the mountains and flooded the entire city, the towns out, right? I mean, absolutely. And a lot of people lost their lives. I mean, obliterated the area. So we're in a brave new world, and we have to crack the code on solving for this problem and doing it in a way which doesn't cause other problems like massive inflation because we're charging or we're constrained on what we produce in terms of energy. So I'm a big believer that that everything should be out on the table, that we have to go and drill baby drill, that we have to come up with alternative, more cleaner forms of energy. We have to create markets. We can't allow people to pollute and not understand that there is a cost to pollution. And there's climate pollution, there's plastics in the ocean. I mean, all this stuff has to be cleaned up, or we're just poisoning ourselves, and maybe we'll live long enough and not live long enough to be poisoned by it. But it doesn't excuse us, because we have really a sacred responsibility to our kids and our grandkids to leave an environment which is fit to live in.
Yeah. Okay. Coming down to the end of our time together.
Oh, by the way, you asked me a question. I think you should have diversity in hard assets, mining assets like precious metals, because there's an inflation risk. I think you can get some of that with crypto. I know a little bit. I think you don't want to have everything, because there's a chance that some of that crypto could disappear. There's no real, like, Bitcoin has a value to it because people believe it should have a value, but it has no intrinsic value. So it's something to keep in mind. I think that real estate, but it's very location specific. So you want to go where the demographics are going to support it, okay? Meaning that you have an inflow. So as opposed to an outflow of people for reasons. And so sometimes tax policy, as we saw with the Trump tax bill, the repeal of the SALT tax deductions, that drives those migration patterns. So you're seeing inflows into Tennessee, you're seeing inflows into Texas, inflows into Florida, but you're seeing outflows from places like California and New York. And that was frankly a master stroke of politics, because you took, fairly well-to-do, highly capable people, and you drove them into states that had turned purple, and now they're red. And then I would say that you should have money in the market, but the market's looking pricey, and I think that most people are not great at stock picking, but it's ultimately very niche specific. So having a well-balanced, diversified portfolio, I think, is the smart thing to do, because there are substantial risks in all of these areas, right?
Very wise. Diversification and balance, I would add to that. So, okay, David, if you had one nugget of advice for anybody that you're mentoring or following in your footsteps, what would that be?
Get to the point where you can pay it forward and pay it forward. I think you get a lot of sort of personal psychic income and well-being, and particularly for those of us that are spiritually oriented. I look at this to me. I don't believe that God needs me in church. God needs me to work in the public and make people's lives better. But I'll tell you that if you get involved and you do something and you give something back, you're going to be better for it. And I think that all of us need to do a little bit. And if all of us do a little bit, everyone will win.
I love that. I love it. Paying it forward. Well, David, thank you for taking the time to be with us. Anybody with that C title has very precious little time, and I appreciate you sharing it with us. And for our audience, thank you for joining us on this episode of the Growth, Grace, and Prosperity podcast. And I hope that you will join us for the next one. Thanks a lot.
Nice to see you, Stewart. Thank you.
Thanks for tuning in to the Growth, Grace, and Prosperity podcast. If you'd like to be a guest, visit growthgraceprosperity.com/guest. We'd love to hear your story.